What is money? When was money invented? Who invented money? Interesting questions indeed. The history of money is fascinating and goes back thousands of years. From the early days of bartering to the first metal coins and eventually the first paper money, money has always had an important impact on the way we function as a society. Some say money is the opposite of the weather. Nobody talks about it, but everybody does something about it. How true is that? Let us know in the comment section below what you think about money. Now let's find out more about money. So what is money? Interestingly enough, money often has no intrinsic value. Instead, money is an object that has a value placed on it, which allows for the trade of goods and services. Some money, such as metal coins, has actual value in terms of the materials used. However, paper money is more common in the modern world and typically has no real value. Throughout the evolution of money, the currency has taken several different forms. Before money was invented, people bartered for goods and services. It wasn't until about 5,000 years ago that the Mesopotamian people created the shekel, which is considered the first known form of currency. Gold and silver coins date back to around 650 to 600 BC, when stamped coins were used to pay armies. Some evidence suggests that metal coins may be as old as 1250 BC. When there was no currency, people traded goods and services for what they needed. One farmer, for example, would trade livestock for vegetables, while another would trade labor or lumber for livestock. Honestly, I can't imagine trading my goat for vegetables. That is mental torture. But anyway, that's for another time. These transactions were the early building blocks of our modern economy and would go on to create the future of money the world knows today. Money in some way, shape, or form has been part of human history for at least the last 3,000 years. Before that time, historians generally agree that a system of bartering was likely used. Bartering is a direct trade of goods and services. For example, a farmer may exchange a bushel of wheat for a pair of shoes from a shoemaker. However, these arrangements took time. If you were exchanging an axe as part of an agreement in which the other party was supposed to kill a woolly mammoth, you had to find someone who thought an axe is a fair trade for having to face down the 12-foot tusks of a mammoth. If this didn't work, you would have to alter the deal until someone agreed to the terms. Slowly, a type of currency involving easily traded items like animal skins, salt, and weapons developed over the centuries. These traded goods served as a medium of exchange, even though the value of each of these items was still negotiable in many cases. This trading system spread across the world and it still survives today in some parts of the globe. One of the greatest achievements of the introduction of money was the increasing speed at which business, whether mammoth slaying or monument building, could be done. Sometime around 770 BC, the Chinese moved from using actual usable objects such as tools and weapons as a medium of exchange to using miniature replicas of these same objects that had been cast in bronze. Due to impracticality, nobody wanted to reach into their pocket and impale their hand on a sharp arrow, so these tiny daggers, spades, and hoes were eventually abandoned for objects in the shape of a circle. These objects became some of the first coins. Although China was the first country to use an object that modern people might recognize as coins, the first region of the world to use an industrial facility to manufacture coins that could be used as currency was in Europe, in the region called Lydia, now Western Turkey. Today, this type of facility is called a mint, and the process of creating currency in this way is referred to as minting. In 600 BC, Lydia's King Alyattes minted the first official currency. The coins were made from electrum, a mixture of silver and gold that occurs naturally, and the coins were stamped with pictures that acted as denominations. In the streets of Sardis in approximately 600 BC, a clay jar may have cost you 2 owls and a snake. Lydia's currency helped the country increase both its internal and external trading systems, making it one of the wealthiest empires in Asia Minor. Today, when someone says as rich as Croesus, they are referring to the last Lydian king who minted the first gold coin. Then, around 700 BC, the Chinese moved from coins to paper money. By the time Marco Polo, the Venetian merchant, explorer, and writer who traveled through Asia along the Silk Road between AD 1271 and 1295, visited China in approximately AD 1271, the Emperor of China had a good handle on both the money supply and various denominations. In fact, the place where modern American bills say, "In God we trust," The Chinese inscription at the time warned, "Those who are counterfeiting will be decapitated." Can you even for a minute imagine that on the dollar? We moved on as a society quite swiftly. Anyway, parts of Europe were still using metal coins as their only form of currency all the way up to the 16th century. This was helped by their colonial efforts. The acquisition of new territories via European conquest provided them with new sources of precious metals and enabled them to keep minting a greater quantity of coins. However, banks eventually started using paper banknotes for depositors and borrowers to carry around in place of metal coins. These notes could be taken to the bank at any time in exchange for their face value in metal, usually silver or gold coins. This paper money could be used to buy goods and services. In this way, it operated much like currency does today in the modern world. However, it was issued by banks and private institutions, not the government, which is now responsible for issuing currency in most countries. Now, the first paper currency issued by European governments was actually issued by colonial governments in North America. Because shipments between Europe and the North American colonies took so long, the colonists often ran out of cash as operations expanded. Instead of going back to a barter system, the colonial governments issued IOUs that traded as a currency. The first instance was in Canada, then a French colony. In 1685, soldiers were given playing cards denominated and signed by the government to use as cash instead of coins from France. The competition between countries often led to currency wars. The shift to paper money in Europe increased the international trade that could occur. Banks and the ruling classes started buying currencies from other nations and created the first currency market. Now, the competition between countries often led to currency wars, where competing countries would try to change the value of the competitor's currency by driving it up and making the enemy's goods too expensive, by driving it down and reducing the enemy's buying power, or by eliminating the currency altogether. The first banks were started by the Roman Empire around 1800 BC. These banks offered loans and accepted deposits from individuals, but would later disappear with the collapse of the empire. By the turn of the 19th century, banks had become respectable organizations within communities and learned the concept of fractional reserve banking. Since individuals didn't all withdraw all their money at once, banks learned that they could loan more money than they actually had, which was a huge step in the history of money. Now, in 1816, gold was made the standard of value in the country of England. This meant that each banknote represented a certain amount of gold, so only a limited number of banknotes could be printed. This gave previously unbacked currency some semblance of value and stability. And by 1900, the United States had followed suit with the Gold Standard Act. While this would lead to the US establishing the central bank that plays a vital role in the economy today, the gold standard ended in the 1930s due to the depression and the devaluation of gold. Now fast forward to today. When it comes to convenience, credit cards and debit cards are popular choices. A debit card is loaded with a set amount of money from your bank account, with money being removed from your account after each purchase you make. And credit cards are a little different in the sense that they don't carry a balance that you have to put in, and instead lenders can choose a credit limit to set on your card, allowing you to spend up to a certain amount before you have to start paying it back to continue using your card. Nowadays, digital currencies such as cryptocurrency and virtual currency play an important role in the economy today. These currencies have a value assigned to them just like any other type of money, with billions of dollars in digital money being transferred all the time. Bitcoin was one of the first and biggest forms of digital currency, but virtual currencies and other crypto options are becoming more and more popular. The appeal of virtual currency is that it offers lower transaction fees than traditional online payment mechanisms and is operated by a decentralized authority, unlike government-issued currencies. Knowing about the history of money and how money impacts your life is important, but understanding how to manage your money is even more crucial. Throughout the history of money, finding ways to save, invest, and spend smartly has been key to financial success. Someone once said that the safest way to double your money is to fold it over and put it in your pocket. Do you know or agree with the assessment? Let us know in the comment section below. Also, give us a like, share the video, and don't forget to join our Telegram channel where you can discuss the best DeFi, crypto, and trading strategies available. As always, guys, stay safe in the DeFi space and have an amazing day.